But what's interesting is that the forward-looking indicators are starting to suggest that we will hit the bottom of the recessionary wave in about April. So we're likely to get, I think, 2, maybe 3/4 of negative GDP. But I think it's more akin to the 1990 style recession, which was the stock market fell 20%, the economy fell 2%, ISM went down to 40 or so. It all recovered. There was some overhang. The economy was slow for a while and then eventually recovered. A normal garden recession. That's what I think we're in the middle of. I think people are confusing prices, which is the unwind of the prices as in markets, the unwind of everything that happened in 2021 got unwound in 2022. And I saw Dario Perkins on Twitter calling it the A-shaped economy. So as opposed to a V shape, it was an A shape. So it went up, came back down, and it's reverted back to
Real Vision CEO Raoul says he believes that overall economic activity will likely turn negative in the coming quarters before picking up again in the final quarter of 2023. Before going further into this video, make sure to subscribe to the channel for more updates. So far this year, economists can't fully agree on if, when, or how bad a recession could hit. A Bankrate poll found a 64% chance of a recession by the end of 2023, while another survey finds a 70% chance of recession in the next year. Bear markets will often test investors' patience and commitment. By the end of the bloodshed, only a fraction of the market participants will remain. Many that threw in the towel will never come back. If we take a closer look at the U.S. economy as recession fears linger, U.S. bankers expect a downturn in the second half of 2023, if not sooner. Latest survey data from S&P Global show that the economy has started the year on a disappointingly soft note, with business activity contracting sharply again in January. The manufacturing sector might have entered a recession in late 2022 as consumers continue to shift away from goods and towards services. In January, federal regulators warned of crypto asset risks to banking organizations, including volatility and fraud. Several banks suffer heavy deposit losses related to digital assets in 2022 as prices and volumes declined and 3 trading operating platforms filed for bankruptcy. Unfortunately, when leading data are as depressed as they are today relative to coincident data, the cycle does not turn without there being a recession. Based on the historical data, stocks have another 15% or so downside if the U.S. has a recession.
My guess is when I look at the rate of change of the S&P or the NASDAQ, they've all entirely priced in a recession. So the NASDAQ priced in an ISM of about 37, which is where my forward-looking indicator, my Global Macro Investor Financial Conditions Index, has been pricing the bottom of the ISM trough. And it's all coming around the same date. So what's happened is the markets have been forward-looking. They discounted the recession fast, and they're now starting to discount the pickup on the other side. And that's coinciding with the rate of change of Fed increases coming down. The ECB are the same, the Bank of England are the same. Everybody's slowing down their rate increases and are going to pause mode. Whether we get one more hike or not, I doubt it actually, but there's a chance we get one more pause. The bond market's starting to realize that that's probably the case as well. Also, global liquidity, M2 cycle, stuff like that, that's been picking up. It started with China, and it's going to start resonating throughout the world. Things like the falling dollar, falling commodity prices start picking up this kind of rate of change of liquidity. That also suggests that we kind of are bottoming around these levels. So we've got global liquidity bottoming. We've got the rate of change of interest rates. That's taking the pressure off the neck. You know, Jay Powell's had his foot on the neck of the markets and the economy. So he takes his foot off, things can rise again. So that's kind of what stage we're seeing now. I think earnings have been discounted in price. All of the sentiment indicates everyone's maximum bearish. And using my macro framework I've been using for 18 years, I just don't think that's the case. Now, we're talking probabilities, not certainties. So anything can change here. But my view is that overall is that the worst is behind us. It bottomed in October when I wrote a big Twitter article and a big global macro investor piece calling it the bear market killer, which is October. And bang on schedule, the whole bear market stopped in October. I had lots of technical signals like demark counts telling me monthly and weekly and daily that this was probably the low. I'd already had that in crypto back in June for ETH, and then again in Bitcoin and others into October. So we've got this perfect set of signals across everything. the liquidity cycle picking up, maximum bearish sentiment, the worst I've ever seen. And I think in Global Macro Investor, we put together 40 of these sentiment indicators of stuff going back to the 60s. And it was the worst sentiment the markets have ever seen. And then we had the option buying and all of that, the put option buying, all of that stuff. So I'm now bullish risk. And I've been flagging this for a while, and I flagged it when I started buying crypto in June, and I flagged it when I re-added it. And I've been talking about, I think the inflationary pressure is coming. I think inflation goes negative next year. Actually, this year, sorry. I think the rate of decline of commodities is much sharper than anybody realizes. I think wages are rolling over. I also think rents are rolling over. So the whole lot is coming down, and that will go all the way through till 2024.
The first month of 2023 was marked by a stunning Bitcoin price surge, which confirmed a widespread belief that crypto markets were bottoming out. Bitcoin spiking 40% almost in a straight line after 2 months of barely any activity has caught off guard many bears. Historical trends suggest Bitcoin may have hit its bottom after a year-long bear market and be poised to rally. But the correlation between cryptocurrencies and the stock market means it may not matter, and cryptos could be vulnerable to more losses. While the largest crypto has soared 40% since the start of 2023, that belies what a bad stretch Bitcoin has had, down 2/3 from its late 2021 high as the total market capitalization of digital assets fell to $1.1 trillion from nearly $3 trillion. News surrounding inflation and recession concerns, a tight labor market, and tech layoffs have been major drivers of stocks this year. The Nasdaq 100 rose 10.6% in January after falling 33% in 2022. Still, some stocks are off to a rough start.
At this point in the cycle, the kind of macro spring, you tend to see the S&P doing this, the Nasdaq doing this, growth tech doing that, and crypto doing that. And that's my expectation, that if you're, not volatility adjusting the returns, you want to get the fastest horse. It's likely to be crypto. Then it'll be technology stocks, the growthy end, stuff like ARK is already up 100% or so. Then it'll be the Nasdaq, and then it'll be the S&P. Commodities tend to do okay. Cyclical companies tend to do pretty well in this environment as well. Tend not to outperform technology. Emerging markets tend to do pretty well, particularly if the dollar's slightly weak. So that's kind of where we are. We then start focusing going forwards on, okay, what else does this mean? And this is what you're starting to see in things like gold. They're picking up the potential for easing, negative real rates, that kind of stuff. And that's the next phase that I think we come into in the latter parts of 2023. And I think we'll see significant easing for a whole host of reasons in 2023, back end 2024, and back to quantitative easing that I think we'll get by in 2024, maybe even 2023. We'll wait and see. So that's basically the macro setup for me. I'm very bullish risk, bullish crypto, bullish technology, bullish carbon credits, bullish bonds, bullish gold. Don't really have any of it. Starting to wait for things like copper because we've got some secular backdrops. I like secular trends. I don't tend to trade the cyclical stuff anymore. I find it a bit boring, and I don't think it's very easy to make money consistently over time.
Rising interest rates meant to squelch high inflation by reducing economic demand are already causing expectations for companies' sales to drop. For some companies, that means fewer goods sold. For others, it means smaller price increases. For some, it means both, and either usually pressures profit margins and projections. Notably, several bullish formations are occurring that historically denote higher prices over the short to intermediate term. Lastly, overall bullish sentiment is also improving markedly, with the number of stocks on bullish buy signals rising to the highest since March 2022. However, historically, market prices tend to trough 6 to 9 months before earnings bottom. This is because the market anticipates outcomes and was the subject of this week's post on contrarianism. It can be seen that for the first time in months, crypto market sentiment has switched from fear to greed, and another growth cycle is now widely expected.
But generally speaking, if you buy good assets, their volatility is less. So that Bored Ape has been stuck at well, not this particular one, but the floor price has been stuck at 65 ETH for a year and a half. So it's pretty stable. So what's the downside? Well, in the panic in June, they went down maybe to 55 or something. So the downside's about 55. What's the upside? Well, it's been as high as 3x this. These are great call options to own, and I still have my ETH bet. So even if my NFT goes to zero, I've lost a bit of that, the call premium, but the ETH is still there. So it's really It's really interesting. They obviously compound on the downside too. So when you've got a down market, your NFT falls in price and the bloody ETH goes down. Anyway, so that's the story of the dollar, and I'm still bullish dollars for the same reason, and I won't change that view for a bit.
2023, how will disrupted supply chains, inflation, and new sustainability and its trends impact your sector? The bullish formations in the market indeed show investors are hopeful of such an outcome. Unfortunately, there is a lot of history that suggests otherwise. There are plenty of reasons to be very concerned about the market over the next few months. Today for potentially what it is telling us about tomorrow. What are your thoughts on Raoul Pal's prediction about global liquidity cycle in 2023? If you like our content, give this video a big thumbs up and do subscribe to our channel. See you in the next one.